Hi, this is Devins Financial Weekly Stock Analysis Newsletter. Today is May 1st, 2016. Our newsletter is for your informational purpose only. We're not responsible for your gains or losses. Let's take a look at current market trend and our strategy. U.S. stock market uptrend is still under pressure. Some leading stocks suffer losses. On the other hand, gold breaks out to the upside. My action and the trees for the last week is I stay out of the stock and stock-related ETFs. And I long the energy ETF, also long the gold-related ETFs. Let's take a look at the charts. First is again, German DAX index came down last week. NASDAQ really came down. Right now, NASDAQ is right at 50-day moving average. We should see whether it can support around 50-day moving average. And my guess would be it may just linger around 50-day moving average and eventually break down and have another correction. Just like previously in last year, we had two big corrections. Looks like we're going toward that direction. SP 500 is a little bit better than NASDAQ, mostly because of the energy and commodity sector is performing better. And right now, SP 500 still stay above 50-day moving average. However, we still see this distribution, the down days with a high volume. The volume is higher than previous day. That's a distribution day. Too many distribution days indicate institutions selling into the market. Look at gold. It just break out on Friday. It break out this little flat base to the upside. So gold is buyable again. Silver just rush up. So silver is a pre-indicator for the gold. So basically, silver moves ahead of gold. So when silver is in this big uptrend, that's very good for gold price. Gold mining stock ETF, GDX, even go up a lot more than the gold. So compare three of them, gold, silver, and gold mining stock. And it is a gold mining stock has higher percentage of gain than the metal itself. So right now, GDX is in the uptrend. This is a crude oil index, also in the uptrend. Crude oil also goes up. XLE, this is the annual, the monthly chart, long-term monthly chart for energy sector ETF. As we can see, last week I showed you this chart and talked about the possibility that long-term trend will turn up for the energy sector. It is doing it right now. We are at the end of the April. We actually finished April, and the month of April, the energy sector ETF closed above the 12-month moving average, and it's turning to the upside. So energy sector, let's see, previously this is a downtrend, uptrend for a long time, and downtrend very sharp, and turning to the uptrend with a correction, but still uptrend. Now it's a downtrend for the time being, and then enter the nice uptrend. And since this is 2014, sorry, those on the horizontal line, those are the time. So since a year ago, more than a year ago, energy sector has entered a downtrend. Now it's the first time close above the blue line, which is 12-month moving average. So now XLE is officially entered the long-term uptrend. So, and judging from previous uptrend, it can last for years. So we need to watch out the energy sector. XLE is the energy sector daily chart here, uptrend, as you can see. China stock ETF. China is market is closed for the May 1st Labor Day, and the China stock ETF has to stay above 50-day moving average. That's a given. If it fall below 50-day moving average, that's a risk. The whole market can come down. That's what it is. Take a look at FXI. This is a China ADRs sold in America, in US. Still in the uptrend, but the last couple of weeks has been pulled back. This thing also better stay above 50-day moving average. Otherwise, it can turn to the downtrend. Biotech pulled back last week, surprisingly. It pulled back together with the general market. And right now it's at 50-day moving average. It broke down below the previous support 270. IYR is a US real estate sector ETF. Looks like it's rolling over, going to the downside. Jets is an airline stock ETF. Come down, broke support. Semiconductor SMH broke down 50-day moving average, and this is not good for the Nasdaq. So it's more likely Nasdaq will break down too. Semiconductor and also a strong indicator correlated with the Nasdaq. Social media network ETF still in the uptrend, but this is no good. It did not meet the previous high and then came down. That's not very good. Solar sector ETF looks like it may roll down to the rollback to the downtrend. We don't know. We should watch this. XLF is a financial sector uptrend. Utility sector went back up to 50-day moving average, but this is not good. It just sliced through 50-day moving average. That's a bad sign. So now it's repairing some of the. Damage to the chart. Those are the ETFs, the indexes. Sorry, those are the indices. Let's take a look at leading stocks that are still doing pretty good. Let's take a look at the stocks. We have Adobe. Adobe is forming a new handle here. It has a cup, and then now it's forming a handle. And the breakout price is 98.10. 98.10 is $98.10. If Adobe can go above that price, and it would break out from this cup with a handle base. And Amazon is the next one. Amazon just broke out on Friday. Broke out pivotal point. Actually, they took this previous high, $638.16. Or you can take this high as well. It's close enough. So Friday is a buy. If Monday Amazon doesn't go up too much, it's still buyable. And Amazon buy point is $638.16. If you time 5% above it, then this is still in the buy range now. Facebook, it broke out from a cup with a handle base. It's a little bit odd handle, and the breakout pivotal point is a $117 and 07, 117.09. That's it's taking this 10 cents above this previous high. This is a 10 cents above previous high of this point is $117. And if we reach, well, actually, it's already broken out on Thursday. So right now it is buyable. It's within 5% of the breakout pivotal point. And gold, this is a gold. We already looked at its index. This is a GLD, it's a physical gold ETF. And it has already broke out from this base here. So gold is buyable at this price. Google, this is a troublesome sign. Looks like a finished below 200-day moving average. That's not a good sign. However, if we look at the technical, Google has been finding support at $700. So we got to watch out. And at least this is not a short candidate. And if it finds support around this $700, that's good. That means Google has a has a way to move up. But if it doesn't find support, it will just slice through below $700. Then Google will be in trouble. PayPal, the breakout pivotal point is still valid, and breakout point is $38.62. It's right here. Right now, it's still valid. Under Armour, this is a store selling for the sports accessories and clothing stuff. Under Armour is breaking out, and the breakout point is $45.53. So it's right here. And okay, that's all for the leading stock. What to do in the current market? Be very cautious on buying new stocks. Have stop order on the existing long stock. That's always have a stop order if you long a stock. If a stock fall below a certain point, and you get out completely. And in current market, gold and oil are doing very good, and you may consider long the gold-related ETFs or long the oil-related ETF. That'll be all for this week. See you next week.